On this episode of the AAF Exchange, it's all confusing. Trump's first year, the state of the economy, and trade policy. Joining us to break it all down, AAF President Douglas Holtz-Eakin and AAF Trade Policy Analyst Jacob Jensen. Doug, thanks for joining us.
It is always a pleasure.
You know, before we jump into everything, Doug, there's a lot of times I like to joke on here what it's like working for you, but let me just say today that I'm just happy I don't work for the Buffalo Bills and their owner up there, because that, I don't know if you saw that press conference yesterday.
I did not.
That was a train wreck.
Okay.
And good luck to anybody that takes that job, which makes me happy as a Patriots fan, though.
Anything that makes you happy as a Patriots fan, I am opposed to.
Your off season has begun. Any thoughts on that?
The Steelers will, in a very deliberate fashion, pick another coach. So don't hold your breath. This is going to take a while.
Interesting. All right. What else has been on your mind?
Well, I mean, it's just the chaos that is policymaking, but especially the housing policy rollout that we've seen. You know, we've been hinted at several times that the administration was going to declare a federal housing emergency, because, in fact, affordable housing is a big issue. And then we were told, no, but we're going to have a major announcement at Davos. There were things going on at Davos, but it wasn't housing policy, I assure you. And so it's just very frustrating, because what they have ultimately done is pretty thin. I mean, there's these things that are pointless, like, oh, let's cap credit cards at 10%. So that people have more money to put down a down payment. You buying that one? I'm not buying that one. That's a terrible idea. Let's go buy $200 billion worth of mortgages with Fannie and Freddie. Check out their balance sheet. They don't have $200 in the bank. So, you know, how are they going to do that?
Yeah.
I don't know. And then the thing they did roll out was, well, we're going to keep private equity firms from buying houses. We've been around this block before with Elizabeth Warren and others, and there's no there. I mean, there's no evidence this is the source of a problem. There's no evidence that banning it will make house prices lower. And by the way, what you're really saying to Americans is, you own a home, we're going to get you less money when you sell it. That's not exactly the message you want to send. Yeah. And, you know, so all of this stuff is at best thin. Right? You know, maybe they'll find some anti-competitive behavior. Maybe they will, in fact, kick private equity off taxpayer-backed guarantees. I'm all for that. Like, the less taxpayer money we have behind real estate, the better. But the whole housing thing is a mess, and they're not making any real progress.
Yeah, it seems. I mean, I know this was a big issue on the campaign, so, I mean, we knew something was coming, but this doesn't seem the right thing.
A year to come up with something, and we've got this.
Nothing.
Yeah. I mean, and as I said in the dish,
yeah,
it's not a nothing burger, because in RFK's world, no burger is a nothing, but it's close.
All right. On that note, let's move on to the economy.
Oh, okay.
The top. So we got more numbers today. That we got. You know, the backdated PCE. Thank you. I kept wanting to say CPI for some reason. Numbers. The top line numbers across the board have looked pretty solid. I mean, growth, jobs, the markets, but you argue that doesn't capture what's going on underneath. How would you describe the state of the economy right now?
It's hard to say. I mean, as you said, the top line numbers are really good. So if you do a tour through Trump's first year, we come into the year growing at about 2.5%. The first two quarters are chaos because of the tariffs. We have the front loading of everything in the first quarter and measure GDP as negative. We then have Liberation Day in the aftermath, and we get a big positive number. But the first half averages 1.5%. So there's a clear downshift in the data. Third quarter, gangbusters just came out, revised 4.4%. Fourth quarter, looks like the measured number might be really big, like over 5%. That's GDP Now's number. But if you look at where it's coming from, it's all inventories and net export stuff, which when you dig through, it turns out to be exports of non-monetary gold. So, I mean, that's not my idea. Like, you know, that was great in 17th century England, but this is not what we were looking for.
We're not quite there anymore.
No. So, and you know, you go to the labor market. Labor market is fine in that, you know, new claims for unemployment insurance, just right on trend. Nothing major going on there. But no one's getting hired. And if they are hired, they're home health aides. And that's not great. Wage growth has slowed through the year, so the real wages are growing more slowly now. And I think that's the root of the affordability issue. And so, yes, the top line numbers are good. And yes, the GDP now number, which is not a real number, is good. And that's what the president was talking about at Davos. But meat and potatoes paycheck data, not nearly as promising. Trying to get a job as a newly minted college graduate, terrible.
Yeah.
That's not a recipe for success. We need to have something a little more vibrant.
So, I mean, you've written about the sort of this bifurcation in the economy quite a bit, and it seems like like you just laid out, it's being propped up by AI, gold exports, etc.
Weird things, weird one-offs. I mean, it's always better to be lucky than good, and the big AI investment boom really saved 2025. There's no that gave us the top line numbers that we got. And productivity, we had this conversation too. The third quarter, 4.4%. Labor growth, essentially zero. So that's all productivity growth.
Yeah.
And so when we first saw that, I was like, oh my God, I bet we haven't seen 4.3% in 2 decades. We go back and look. Last time we had productivity growth that fast, third quarter of 2023. Okay, so lesson, productivity is really volatile. And you get big numbers and they go away. So I'm not counting on anything.
Interesting. Yeah, I mean, and like you noted, it's really, if you have a job, it's great. I think you've said this a million times, but if you're trying to look for a job, it's good luck. Good luck to you.
Yeah, it remains a labor market that no one's getting hired, but no one's getting fired.
Yeah, and
that's not the labor market we want. We have always prided ourselves on a very dynamic labor market, and we're not seeing that right now. And it's also been true that always job changers get bigger pay increases.
Yeah,
that's why you change
that's
jobs.
Part of the whole affordability and wage
that's
growth
not going on.
Yeah.
So that's part of what's going under the affordability issue.
Yeah. So what are the tea leaves saying for the rest of 2026? I mean, we're less than a month into 2026, but
so the other way to do the year in review is the policy cycle. And so first thing was the tariffs, Liberation Day, turn them on, turn them off, all that stuff. Next in line was the One Big Beautiful Bill, which was sort of blah, but had these expensing provisions, which were good pro-growth policy. Nowhere during the year were we doing spending issues. We can't fund the government. No one's touching entitlements, so put that aside. And then the regulatory state, I think, has been underreported by the Trump administration. I don't really understand it. Dan Goldbeck has like over $200 billion in regulatory costs removed, but the biggest accomplishment is not taking old costs off the books. There's no new costs. Like, this regime does work, and they do that. So that's what went on in the cycle. Now they're waiting for the payoff of the One Big Beautiful Bill Act. And the payoff is supposed to be first half of 2026, we get a big fiscal push. CBO estimates it at worth 0.9% of GDP growth. So, no matter what goes on in the first quarter, where I think it probably should be slow, but who knows for sure, you're going to get a pickup as the year goes on. So I don't think growth is going to be the major concern this year. It's going to be, does that growth translate to jobs, which it hasn't in the second half of this year, and does inflation come down? And I'm actually quite nervous that the inflation is going to hang up there.
Yeah, so you started talking about some of the president's major policy initiatives.
Yeah.
So, he had the speech in Davos. President Trump made, several. He's actually made several major speeches this week, both at home and at Davos, touting those successes in his first term. So, just quickly summarize those claims that he made.
Well, I mean, the claim is always that the economy was dead in the water and had tons of inflation, and inflation's gone, and now there's growth, and that gets exaggerated on all sides, right? I mean, the economy was not dead in the water. We entered growing at about 2.5%, very solid growth. Now, that comes off some years that were horrible under the Biden administration, but 2024 was not one of them. And inflation wasn't 9%. He inherited inflation that was basically 3%. It went down to something in the low 2s, 2.3 in April, and went back up to 3%.
Yeah.
So that's not the raging success he suggests. Instead, it's a year of puts and takes, right? Things that went well. I think the expensing policy is really good. We got a big investment boom. I think that's really good. The tariffs, I think, are a policy misstep, and they bleed into everything.
Yeah, and how and so with all these policy sides of things, how in the economy side of it as well, how will the Fed deal with a lot of this year?
I think the Fed did a pretty good job of navigating. It's hard to remember, but you go back to April, Liberation Day, and they're asking Powell about what are you going to do? He goes, we don't know. We haven't seen tariffs like this in 100 years, and that's right. And so given the level of uncertainty that surrounded the tariff policy in particular, but policy in general, plus the fact that you're just trying to read the economy, which is hard, I think they did by and large a good job. Here's the kicker, though. I mean, this is has to be the frustrating part. They've cut their interest rates by 175 basis points since fall of 2024. The 10 years at the same level it was in the fall of 24.
Yeah.
So that tells you that markets are looking at this saying, number one, you may still have an inflation problem. We're not buying it. Number two, you may have a really big deficit problem and no one's making any progress on it. And I think both of those are true.
Yeah, it would be nice if we are in an election year. I mean, it's a midterm election year, so it's not a presidential one. But it would be nice if the last time we had a presidential election, you and I talked about a lot about maybe it would be nice to have a conversation about dealing with spending and things like that.
That would be fantastic. But that remains the unfulfilled dream.
Yeah, the hopes and dreams of you and I aren't really.
Yes. Yes. I try not to share my dreams in public.
All right. On that note, I'm going to bring in Jacob, and we're going to talk about some tariff policies. So.
Will you enjoy that?
Yeah, that's going to be fun. Jacob, welcome back.
Great to be back.
So you've had a pretty slow start to your year.
Oh, yeah, for sure. Barely gotten any sleep. Yeah.
Yeah, there's a lot going on in your world.
Yes.
So we're going to try and talk about as much of that as possible today.
All right.
And fit it all into a short segmented podcast, but let's give it a try.
Sounds good.
So yeah, it looks like it's going to be another big trade news year right out of the gate. Let's start with Greenland. I mean, that seems to be the biggest news out of Davos and throughout the markets. Walk us through what's happened.
Yeah, so this whole situation began when President Trump said we need Greenland to own Greenland for national security reasons. As you'd expect, some European nations started to freak out, so they sent soldiers to the island to protect it from the United States. Trump didn't like that, so he imposed a 10% tariff on these countries that had sent soldiers to the island over the weekend. As you mentioned, Davos, the World Economic Forum's happening. So during a meeting with the head of NATO, there was some sort of agreement that was reached. So now those tariffs have been called off for some sort of future Greenland deal that we don't really know the details about.
Yeah, so basically right now it's just a lot of like everybody stand down, and then there's some social media speculation out there on what that could be, but we don't know what the details actually are for any of that.
Nothing official yet.
So, but I mean, all of this has been ongoing. This has been an ongoing conversation for almost a year now, right?
Right.
Like, so you and Fred, our colleague, did like a cost estimate, and what if we did buy it? What would it be? What did you find?
Yeah, this isn't the first time Trump's floated the idea of either purchasing or acquiring Greenland somehow. Last year, Fred and I, as you said, did a cost estimate. One was valuing it as just a giant mine, so all the minerals that are there. That puts it around $200 billion in terms of value for critical minerals and whatnot. Then we valued it due to its like strategic location and its real estate value. So we used Iceland as a proxy. That puts it more in towards the $2.7, $2.8 trillion range.
Jeez.
So there's a very wide range depending on how you want to value the island.
Yeah, so it would cost a little bit. We'll just leave it at that.
For sure.
Yeah, so I mean, but it seems like trying to make sense of this. So they're standing down on the tariffs. Do we know anything about the EU trade deal that's happening, or is that part of some other negotiations? Where does that stand?
Yeah, so the day before, or a few hours before the future deal was reached, the EU Parliament said they're no longer going to work to implement the EU trade deal. that's currently where we stand. Don't know if they're going to backtrack or not, but that's where we are.
So more fun for trade and just holding our breath for now.
Right.
All right, so let's move on to the Middle East. President Trump has recently threatened to impose tariffs on any country that does business with Iran. How should we think about that in terms of policy and potential fallout?
Right. So again, there's nothing official there. There's no executive order or whatnot. So it's uncertain if this is actually in place, when it's going to happen. It's a 25% on all countries that import from Iran. That's about 119 countries. So it's like 90% of all of our trade value are these countries that trade with Iran. It, depending on if we actually implemented this, it's like a $300 billion plus tax increase for U.S. consumers.
Yeah. So what kind of countries who would this impact the most? What specific fields would this impact?
So the largest trade partner with Iran is China. So if we had just focused on China and a few of the other top partners, it significantly reduces to about $100 billion in costs. But again, there's no specifics on how this is going to be implemented, if it's going to be implemented, or if it's just another Greenland type threat.
So another threat to move the direction for a foreign policy matter.
Exactly.
Interesting. All right. Well, I guess we'll have to wait and see on both the Greenland front and the Iran front. But last week, President Trump also announced tariffs on semiconductors.
Yep.
You just put out a paper yesterday about this. What's the latest there? What would the impact be?
Yeah, so this is a 25% tariff on about $240 billion worth of semiconductor and related imports. So at face value, this is very expensive. It's about $31 billion in costs. But you have to factor in that there's a lot of trade agreements that have capped the tariff rate at 15%. So if those are upheld and this reduces significantly, there's the United States Mexico-Canada agreement, which is the tariff-free entry method. That again reduces the tariff costs. And then even in the executive order that implemented this, there's lots of exemptions for certain types of semiconductors, like those that are used in AI data centers. So this goes from a $31 billion cost down to around $4 billion if there's high exemptions.
Interesting. So so semiconductor, just for me, or tell me about how semiconductors would impact our economy the most, just for me.
Yeah. So, I mean, as you know, AI data centers are a big topic right now. If those are tariffed, those costs are going to go up. There's going to be less investment in the United States if those are implemented. But like I said, those are exempt from the order.
Interesting.
Yeah. So it's going to have rather minimal impacts, at least for now.
Interesting. So, but as we know, things change quickly in trade policy these days.
The tariff could double, overnight, and then we're talking about something different.
Yeah, interesting. All right, so finally, another big topic we're sort of tracking, or actually we're just waiting for at this point. The Supreme Court has, delayed its ruling on the president's use of the IEEPA tariffs. Remind our audience what's at stake for this decision and what the implications could be for the president's trade authority going forward.
Yeah, so the IEEPA tariffs, that's the bulk of the administration's tariff agenda. Over 90% of all tariffs that have been implemented are through the IEEPA, pathway. So the Supreme Court has delayed its decision, I think, 2 or 3 times now. The next decision day, I think, is now February 20th. So we have to wait another month, living in uncertainty, especially for businesses. They have to wait and live in uncertainty, figure out, are these tariffs going to be struck down? Will businesses get tariff refunds since they had to pay so much last year? Are they going to get a refund from the administration? That's kind of what we're looking at.
Yeah. So, all right, let's break it down a little bit more. So, IEEPA. What are the IEEPA? What is the IEEPA authority?
That mainly applies to Liberation Day tariffs that are the across-the-board tariffs that apply to all trade partners.
Are these like the national security ones? Yeah. So these are the national security ones. So basically, what the court is trying to figure out is what the national security, if the president has a national security authority to just impose these tariffs.
Yeah. So if the court strikes down these tariffs, it's going to significantly rein in what the president can declare a national emergency. Can he declare a trade deficit a national emergency? That's kind of what's at play. Or will Congress have more authority over trade?
Yeah. So will he have to actually go to Congress and say, hey, these are the tariffs I'd like. Could you put them into law for me? So And then at the end, you mentioned, okay, so if they do strike these down, there's this potential. Well, what do businesses have to get? Can they recoup some of that money that they've already paid in the IEEPA money? Like, what is your sense on all this?
So the administration's come out and said that they will follow the court's order. If the court says that refunds are necessary, then they're going to follow through. So that's well over $100 billion in tariff costs that will be given back to businesses. It's through some form of refund.
Interesting. So I guess we'll just have to continue to wait and see. And hopefully the delays will come to an end soon because,
Right.
like as you said, these are businesses are trying to figure out that it's hard to operate without knowing what the rules are.
Exactly. They need to know, do I need to increase prices? Can I lower prices yet? Because
Right.
a lot of them had to raise prices to adjust the tariffs.
Yeah, and by the way, many Americans are dealing with this whole affordability
Exactly.
issue out there. So anyways, Jacob, I know you probably have to go back and rewrite your shipment a few times based off of new news from yesterday.
Right.
So I'll let you go and won't keep you any longer. Thanks for joining us.
Great, thanks.